Oh yeah, just what they need, but then they fed me lies. It comes as no surprise that we still holding on, and fear would take it over. They said we don't belong. We will not on the door, we will not take a no. You will not gain control, cause maybe this is just the way that we roll. So just go, we will.
Good morning to all of our viewers. We are coming live from the Georgetown capital, and this morning we will be continuing our mission, basically, of educating the populace about everything finance. And we have another wonderful session in store for you guys that will enable you to learn more about finance, to learn more about trading, to learn more about investing. And I want to encourage you guys to share the live with your friends and with your family so that as many persons as possible can benefit from the knowledge and the information that will be given this morning. With me on the live this morning is a young man from England, Mr. Antonio. He possesses a master's degree in energy trade and finance, and he possesses a wealth of knowledge and experience in this area. And you can be assured that the person that will be giving the information is somebody of a very high caliber. So as we begin this morning's program, my name is Matthew Gaul, and this is coming directly from the Georgetown capital. And this morning, we're going to be talking about online trading platforms and everything that you would be interested in knowing about it. We're going to get into the necessary details this morning. But before we go there, we just want to hear a bit about our guest. Where is he from, and what exactly are you involved in, Mr. Antonio? So over to you.
Thank you very much, Matthew. Hello, everyone listening to us, tuning in just now or a little bit further once we finish the recording session, which is available. So to talk a little bit more about myself, so I do have a background in energy trade and finance. I also possess a bachelor degree from accredited university in the UK, both the University of Portsmouth and Bayes Business School, former CAS Business School, where initially for my bachelor, I studied petroleum engineering, so very, very biased to the oil and gas industry. And then I moved on to do my master's in energy trade and finance, which is a little bit more broad. I also work currently as a risk analyst for a British company with a Japanese parent company, which is Smartest Energy. So our parent company is Marubeni with over 45,000 employees, and I work as a risk analyst for the power and gas sector. Before that, I was working with data providing within the oil and gas within the energy sector, where my main job was as a market analyst within the crude oil market and products. So I know a little bit about the energy market, rest assured of that, and here to answer some questions. I'm also a certified trader in technical analysis, so more of that to come.
Excellent stuff. You're very experienced, very educated, and I'm pretty sure that you will do our discussion justice. So as we begin our discussion this morning, I want to ask you, for persons who may not ever heard about trading, more so online trading, what exactly first is trading, and then can you tell us about online trading and the rise of online trading? As we know that our world is transitioned to predominantly technology and technological means, what is trading and what is online trading?
Of course. Thank you, Matthew. This is actually a question, and it's important to kind of set the foundation to not just those that are vaguely interested or that have a vague concept of what trading is, but also for every single one of us or every single one of the spectators who don't actually know they don't know much about trading and they would like to learn a bit. So you mentioned a very interesting point, Matt, which is the development of technology, and that's what trading really stems for, because when we drill down into the pure definition of trading, that is supply and demand. And regardless of traditional or online trading, trading itself, it's supply and demand. A person possesses a commodity, on the other side of the line, somebody needs the commodity. That creates the need for a trade. That creates the need for a product to circulate, to go from the supplier, the person who has the product, who has the material, to the other side of the consumer, the person who needs the material. And that is basically what trading is. And that concept is a very generic concept, not just for the commodity market, but also for the stock market, for the indices market, for instance, where you have the S&P 500 or the Russell 2000, which are the US big stock markets. So now when we start drilling down a little bit more into the online market and what it is, and compared to a little bit more to the traditional one, the online market comes with the development of technology. And why do I say that? Convenience is a very big factor. You have affordability, for example. And the thing about brokers is that, which is the traditional, every broker has a different price, every broker has a different fee. But once you concentrate, once you gather around a platform, which is the online, developed through the advancement of technology, then you have a lot more people that can actually trade multiple asset classes, whether it is commodity, whether it is stock markets, for example, Apple stocks, or any other asset classes. You can trade that at the click of a button, and that can only be achieved through, let's say, online trading. You have the platform readily available for you, multiple platforms out there. So something that I know is that in Guyana, for instance, you need to comply with insecurity laws to make sure that you remain compliant with all these trading platforms. So before you actually start trading, it's important that you get to know what is available in your country for you and all the necessary steps for you to do that. And that is a very important step, right? With the development of technology, then people like myself, for instance, who start trading in the last 6 or 7 years. Before that, I didn't know much, but once I got into it, I got into the hang of what hedge funds manager were talking about the financial market. So it gives you a broad overview of what the financial market is all about.
Excellent stuff. Now, you mentioned that you recently started trading over the past 6 to 7 years. Can you share a bit more about what your experience has been like, transitioning from not knowing anything about trading to being a certified trader now? What has that experience been like?
It has been an amazing roller coaster. And I'm going to tell you why. The life of a trader, it is something, but it's something chaotic. It's not on a daily basis. You have a lot of challenges. But just to go back a bit on how I started. So many years ago, when I was still at university doing my bachelor, I noticed that I noticed that a lot of people were getting into the Bitcoin frenzy. And they were getting into the Bitcoin frenzy, but without really knowing much about it. So people were losing money and they didn't have an explanation for that. On the other side of the spectrum, people were making money, which is good, but it can be a little bit dangerous when you don't know why you're making money. So I decided to enroll into a lot of accredited trading courses, and one of them was a very long-term trading in technical analysis. And they give you also an overview of fundamental analysis and behavioral analysis. So just to break down a little bit in a couple of words. So the technical analysis, it is looking into charts, past historic data to try to predict the future. Whereas fundamental analysis is looking into aspects of the market, supply and demand, what OPEC, for example, in the crude oil market will say about the state of the market, and then you're able to make an informed decision. Or with stock markets, when you have a lot of information about the company. So that's basically how I started gaining a lot of traction, gaining a lot of interest in the trading market. And that's something when you look back and you try to underline a couple of points that I did right, the very first one that I will say is that, I got the education for it. And I will actually thank Matthew and the University of Guyana, the Army Corps of VPI, and the whole body that is actually involved in this talk that we have enough for putting this academic talk right here, right now. So I got a mentor at the very beginning, and that was very important because it's important for you to develop a strategy, stick to the strategy, and then make further development from that. So that's basically how I started. And how has it been? I trade up until now. So a lot of people who are in the trading industry who trade on a daily basis, right? So if you ask them, if you keep asking them after 3 months, after 6 months, they'll tell you, oh, sorry, I don't trade anymore. I closed the account. So after 6, 7 years, I continue to trade because I do have a solid strategy. I do have a track in terms of my performance that allows me to look back at my gain and learn from my losses, because that's the life of a trader, right? And you won't find a trader that it was not that doesn't have a loss in their trade blotter. But the most important is the lessons that we learn from that losses, and as long as we can recoup that loss and through a double or triple gain, then that is great.
Excellent stuff. Thank you very much for giving us that hands-on experience of what trading is like. You mentioned something very critical, which is the fact that before you entered into this new venture, you ensure that you were well educated and you gain the requisite knowledge to be successful as a trader. And I think that's very important for persons listening, that if you're going to go into this field, if you want to become a trader, don't just do it because something that is popular, or you may from time to time make a lot of money, but ensure that you know the basics, ensure that you have a foundational understanding of what you're going into, so that you can increase your chances of being successful, and you can also formulate proper strategies to be successful. So I think that's very important, and I'm glad that you mentioned that. Now, as we uh, continue our conversation, what are some online trading platforms that are available for persons who may be interested in trading?
Okay, sure. Matt, as I mentioned, so in the UK, for example, we have a handful, a lot of platforms, and some of them that I use, they are IG and eToro, for example. But those, it's important for me to make a disclaimer that I'm not advertising for those platforms. The contrary, I'm giving you my personal experience on those platforms that I use in the UK, which abides by different financial security laws than in Guyana, for example. And once again, it's very important for anyone who's trying to get into trading and into online platform, gets in touch with you and other representatives of the Army Corps VPI University of Guyana to make sure that they comply with any security or any safety measures regarding online, and that all the safeguarding procedures for online platform. But in the UK, we have IG, we have eToro, we have CMC Trade 212. IG and CMC are very, very popular, and they are international. Again, it's very likely that they would be available in Guyana, but that is something that we would need to check with the local board to make sure that we comply with any security laws that you have locally.
Excellent stuff. So now we want to touch on some of the order types that are available on the various trading platforms. We have limit and stop orders, we have stop loss orders, and other types of orders that are available. Could you shed some light on some of these orders and what they exactly entail?
Sure. I'm glad that you asked that, Matt, because those definitions, that when they are by the book, as I tend to say, they can confuse a lot of people. Limit order, stop order, And there is actually a third one to everyone out there, which is the market order, the one that you just press when you think that the market is at the right buy or selling price. More often than not, we call it an instantaneous order or an instant order, an order that you make right there and there, as opposite to the limit and the stop order. Now, what are those? Okay, as a trader, you might identify opportunities where the rule of thumb for everyone listening is you buy low, you buy cheaper, and you sell higher. You sell expensive. That's the rule of thumb. Everybody wants to buy when the price is at its lowest, and everybody wants to sell high. So from that point of view, a limit order is when you identify these 2 points. When you identify a price that is low enough for you to buy, or when you identify a price that is high enough for you to sell, you set up a limit order. And how you do that? You do that by following the market signals. Market signals, once again, are followed using technical analysis, fundamental analysis, which, guess what, listeners? UMCO VPI, University of Guyana, offers every single one of these courses. This is me telling you the place to go, where to go, and what is available. So every single one of the definitions that we're touching right here and right now, you'll be able to find if you ask Matt a couple more questions on that after we finish these sessions. But that's what basic limit order is. Now, what is a stop order? A stop order is the type of order whereby people like myself, people like you, we are watching the market and we don't want to wait too long for the limit for a limit order. We don't want to say, okay, the price is too low, I'm going to buy here. The price is too high, I'm going to sell here. With a stop order, what you want to do is to set some sort of a ceiling or some sort of a floor. And what do I mean by that? With a stop order, what you effectively saying as a trader is, I want to activate, I want to trigger my trade as soon as the price reaches this level. This is a stop order, because a stop order, you have 2 types. You have a stop buy and a stop sell. What is a stop buy? A stop buy is when you realize that you want to buy past that point. You don't want to buy lower. You don't want to buy at that point. You want your order, your stop buy, to be triggered as soon as it reaches that limit. Okay, now the name can be misinterpreted with what a stop loss is and what a take profit is. So we have seen limit, stop, and market orders. Those are the 3 types of orders that you're going to find in a chart. However, every single one of these 3 types of orders, they have one or two things in common. They have 2 things in common, let's put that way. They have the stop loss, as the name suggests. If you are buying, a stop loss is the point that you are going to stop your loss, that you no longer want the market because the market is coming against you. Similar concept to a sell. A sell is that point whereby you no longer want to sell your asset, and there's a lot of buyers pushing up the prices, right? So buyers are pushing up the price, you are going down, the market is bearish. Bearish means the market is going down. So effectively what you want to do really is to put a stop loss. And how do you place those? To place those is a very technical topic, but I'm going to give you a very basic and reasonable example. So if you are in a selling market, the market is going down. So where would we want to put our stop loss? We want to put our stop loss above our entry point. If we want to put above our entry point just in case the market goes against us. And the market going against us in a bearish market, in a market that is going down, is effectively going up. That is exactly why we want to put our stop loss above our entry point. The opposite happens for a buying order, right? So if you're buying, it means that the market is bullish. You have a bullish expectation that the market is going up. So you place your stop loss below your entry point. Why? Because going opposite you is going down, and that is going to stop you. So it's going to stop, it's going to prevent you from having further losses in the market, and it's going to balance your P&L. So those are a couple of concepts that it's very important. But of course, with everything in life, we are here to make your life simple, but the more you learn about these kind of things, the more you know that things are not straightforward, because there is the bread and butter of trading, technical analysis, which is support and resistance. Now, the way that you place those take profit and stop loss, you will place according to support and resistance. And just to give you a very basic, down to earth definition of support and resistance, if you imagine your support as a floor, because everything that comes from above must find a floor. So the point that every price action drops and finds a floor, it means that finds a support. So where you're going to find a support, you're going to find a support in a declining market, in a bearish market, or in a market that is going down. Likewise, resistance. Most simple example, in life, you have a lot of resistance in life to success, right? It's not a straight line. It's not a straight way up to the top. And that's basically what a resistance is. A resistance is basically a ceiling to success, a ceiling for the price to continue to go up. So every time that you see prices struggling to break a certain level to go up, that is a resistance. And basically you place your stop loss and you take profit according to those levels. But this is me telling you where to place. This is Matt potentially also telling you, yes, I've seen Antonio doing in multiple scenarios. I've seen Antonio doing in his technical trading course. But what about you guys? Have you seen that? So once again, join a lot of all these courses that University of Guyana Army Corps VPI are offering. And one last concept that I'm going to make is the partial closing trades, or the partially closed trades. And the thing about those trades is, the good thing about online platform compared to traditional retail platform, on top of the factors that we mentioned, right? The accessibility, the transparency, right? Those are the unique selling points that all these online trading platforms have. On top of that, they give you the ability to trade on them, to perform multiple strategies on them, right? So when it comes to this online trading, what you can do is to buy fractions. Online trading allows you to buy fractions of multiple asset classes, as opposed to brokerage. Brokerage, I want to define it as a wholesale market. They will try to sell you as a higher lot, but with online retail platforms, you can buy fractions. And what is a partially closed? A partially closed is when the trade is going against you and you put a trading, let's throw a random figure there. Let's say that you're trading a size of 10 lots, and the trade is going against you and is already on the 7th lot, so only 3 more lots to go. What is going to do to your trade is to partially close that trade to recoup the 7, and is going to allow you to trade with 3, in a way of giving you the ability to make the decision whether you want to continue to trade with 3 lots, or you want to recoup, or you want to save those 3. So these are a couple of benefits as well that I would throw in there. So you have the autonomy, the ability to make your own decisions, the control, and just basically the accessibility and sustainability of the online platform compared to the traditional one.
Thank you very much for that in-depth analysis of what are the various order types, as well as the benefits that you can possess from using the online trading platform instead of the traditional brokerage method. Now, as we begin to wrap up this morning's conversation, we want to touch quickly on retail investment. Retail investing, we know it's been growing exponentially over the past few years. But for viewers, could you please explain what exactly is retail investing and what has been the catalyst for the growth in retail investing over the past few years?
Sure, Matt. And there is a very straightforward answer that I found to that question when looking and just trying to drill into retail trading. And the straightforward answer is us. Not just us, me and you, but everyone else that is considered amateur investors without a lot of financial knowledge in the market. I was reading a lot of articles about it, and I found out, not just through the articles, but through a day-to-day experience, common observation of what people are doing, people that are getting right now into the market through online retail trading, because it is, with the development of technology, it is on their phones, it is on their laptops, their iPads. They can literally take that technology, that online retail trading with them everywhere they go. And that is precisely what is driving the growth of retail online trading. People having the ability people having that mobility to take this retail trading with them everywhere they go, and just having that drive to understand what is happening in the financial market. Because whether we want to believe or not, the financial market drives a major part of our life. Everything that we make on a daily basis involves a financial decision. Everything we make. So that is important to drive the retail online trading. Once again, those are the people that are pouring into the financial market. Uh, every account requires you a minimum amount of money that you need to put to open that account, right? So now, if you imagine that millions and millions of people just putting even a couple of cents or a couple of cents to the dollar, or depending on how much those online trading platforms will tell you that you need to put, but you have a lot of people depositing fractions of money. But when you aggregate that, that kind of exceeds what the hedge funds, for example, are seeing. They are outpacing the development of those traditional hedge funds, prudential services, for example. People like us, people that are starting, people that want to know, people that want to invest, and they save some money from their job, for instance, and they want to invest. Those are the ones that are really driving the growth in the retail trading.
Thank you very much for giving us that excellent explanation of what's been the catalyst for retail investing. Now, my final question as we prepare to wrap up, and this one wasn't planned, but what would you say are some important qualities for persons to possess if they want to become successful traders?
For you to become a successful trader, you are the right place. You have done the right thing right now. You have tuned in to this podcast. And I'm not being biased here, because we have given you a lot of information, a lot of context on where to go and where to attend, where to view multiple courses. And remember, at the very beginning of this talk, of this podcast, I mentioned the way that I started was to get in a mentor. Get a mentor. Don't do things out of the blue. Don't go social trading. Social trading can be a negative or a positive experience, but negative more often. Negative because you're just following a crowd, which more often than not, they might not know 100% of what they're doing. Don't go social trading. Get a mentor. Once you get a mentor, make sure that you are able to develop a suitable trading strategy. But most important, 1 out of 3 traders, they quit, as I mentioned at the beginning, and that is a statistic that is out there everywhere. 1 out of 3 or 4 traders, they quit after a couple of months. Why? They don't trust the process. They don't stick to their strategy. It is a long process. And a common song, a common theme that you're going to listen out there from traders is, I was making a lot of money at the beginning, and then I start losing. That's when you know that they are part of those 1/3 or 1/4 of people who will quit later on. They don't stick, they don't abide by their strategy. So it's important that you stick to your strategy, you trust the process. And guys, look, it's very important to drill into your research, to do not trade an asset that you don't know. Make sure that you do the necessary research so that you understand at least the drivers, the technical drivers, the fundamental drivers that allows you to make an informed decision and trade accordingly. So those are a couple of points that I would make. And the more of that, you know, we can definitely see as a lot of more of those listeners join our courses.
Thank you very much, Mr. Antonio, for sharing your wealth of knowledge with us tonight. Uh, we at the Georgetown Capital are truly grateful for you being here and sharing your knowledge with not only us, but the entire audience and everybody that is watching. And I'm pretty sure that as persons leave, they will leave more informed, more educated than they came. And we're very grateful for that. For persons watching, as you require more financial information, more financial knowledge and education, Encore VPI, the Georgetown Capital, is the place for you. You can check our website out for all financial information that you need, bi-weekly articles on various financial concepts as it relates to our stock market and things that are going on in Guyana and the world at large. Georgetown Capital is the place for you, as well as you can also check out the Common Sense podcast, which is aired on Thursday evenings for financial literacy. If you want to learn about budgeting and saving and investing and those financial concepts, Common Sense is the place for you. And we want to thank you once again, Mr. Antonio, for being here. And thank you for all of our viewers for tuning in. And I trust that you guys stay safe and have a wonderful rest of the day. Thank you.
Thank you. My pleasure. Thank you. Have a good one.